Today is Thursday, July 16th, and you are looking at a heat map of the S&P 500. As you can see, the technology sector remains weak. It closed in the red. And today we saw the reversal of the vaccine trade, the travel names, and all the weaker names that got popped yesterday. Airlines, casinos, cruises, giving back their gains from yesterday. So apparently the vaccine pop lasted for only one day. And it's exactly as I told you from yesterday's video. They're going to do this yo-yo game. One day they go with the winner sector, the tech, and the next day they go with the travel weaker names, and then they go with something. And they keep rotating back and forth, the yo-yo game going on. The indecision, waiting for the conclusion of the earnings season so they can make a conclusion whether to sell their stocks or for the traders waiting in the sidelines to hop in and join the ride to the upside. There is 3 trades in the market right now. The tech trade, aka the momentum trade. And then you have the travel weaker stocks names. That is the so-called value trade. And the third trade is the yield hunting trade. And we saw the yield hunting trade consistently today. It started since the morning until the close. You can see the utilities sector where traders usually go to hunt for yields, closing in the green consistently throughout the day. But we saw a little shifting. First, they tried to pop the airlines and the cruises back up. They couldn't. So they shifted to the tech names for a little bit. Then they shifted back to the travel names, and then at the end of the day they just gave up. There is this boredom in the market. These gamblers are trying to poke at every opportunity and make quick buck. These gamblers will be the victims very soon. Their behavior is similar to the guy making stupid poses at the edge of the Grand Canyon. It's just a matter of time before you fall to your death. Hashtag the last selfie. And I'm going to show you, of course, in the charts when we go to the technical analysis, how they did the yo-yo game, shifting from one trade to the other. But first, as usual, we start with the headlines. We had a few of them today, and then we move on to the technical analysis of the charts, and then we conclude and discuss what we should look for tomorrow. The first headline, of course, came from Asia overnight. The Shanghai Composite, in fact, all Chinese stocks sold off. You see the manifestation of the pump and dump. The government cracked the whip, encouraged people to go and join the trade. In the stock market, you saw the fear of missing out. Chinese market was going up like crazy. And then what did they do? The government firms dumped their stocks on top of the heads of these naive investors. Here is a headline from UBS saying that billionaires are exiting equities after making a quick profit. Meanwhile, the Robinhood gamblers are pouring more and more money into the market. Apparently, they are smarter than the billionaires. Here's a headline from the UK, 500,000 furloughed with no pay. So apparently this big unemployment theme is not just in America, it's also in Europe. And the more you read about these headlines, the more you become skeptical about the V-shaped recovery theory, not just in the United States, but globally. Speaking of unemployment, we had the numbers today, the 1.3 million Americans applying for unemployment benefits, claiming unemployment. This has been a consistent theme of over 1 million people every week claiming unemployment. The number was worse than expected. I actually explained to you a few weeks ago that the number that we got in June was the peak of the comeback, and now we're going to curl back down. We're going to have worse unemployment numbers. The retail sales came better than expected, up 7.5%, building on the gains it had last month. However, there's a bit of distortion here because remember, a lot of people are unemployed. The unemployment number is grossly understated, but the PPP loans, plus the $600 a week in unemployment that's gonna expire this month kept consumer power afloat during the crisis. So far, that's the key word. So far. What will happen when the $600 a week expires? What will happen when the PPP loan rules expire and now they can fire your employees? That's going to be the discussion in the months to come. Speaking of the $600 a week, here is Nancy Pelosi saying that we need another stimulus bill. 1.3 trillion is not enough. To her, quote, how much more are we going to rack in debt and spend trillions and trillions and trillions from a top-bottom approach and dig ourselves deeper in this crisis? They already spent over $2 trillion, and that didn't do anything to save the economy and unemployment. All it did is prop up the stock market and do this reverse Robin Hood where the richest people in this country got to loot the treasury and become richer from the PPP loan scam. We are now heavily indebted country. Trillions and trillions and trillions. The budget deficit was absolutely staggering. Over $800 billion in 1 month alone in budget deficit. But hey, keep buying stocks. Keep buying the stock market because apparently we're having a V-shaped recovery. And don't tell me that, oh, it doesn't matter because the Fed is just going to keep pumping money into the market. The disconnect will come to crystallization in the market. That no matter what the Fed does and how much money it pumps into the market, it is not saving the economy. It's not reducing unemployment. It is not increasing consumer power, purchasing power. It is not increasing companies' revenues. All of that will add up. And you will see that disconnect finally connects and the market will crash. Here is another headline. Elizabeth Warren, Senator, and Bernie criticizing the Gilead drug because the government, of course, made a sweetheart deal with Gilead. The biggest criminals in corporate America are pharmaceutical companies, of course, because we the taxpayer, we funded the research and development of the remdesivir treatment, and now they want to charge us for it. The government is funding Gilead $500 million for this treatment. Why? We already paid for it. And of course, here's the real scam of this. You're going to get sick, you'll go to the hospital, and yes, your insurance might pay for some of the remdesivir treatment that you got, but here's the catch. Your insurance premium is going to increase. You're going to pay for it one way or another. You already paid for it. You're going to pay again and again and again. They're going to drain every penny out of your pocket. This is reverse Robin Hood. They want to steal from the poor and give to the rich. And this is why, of course, the stock of UNH, United Health Insurance, keeps going up and up and up every day. Here's the last large bank's earnings that we have this week. Bank of America, profits down 50%. The only thing that kept banks floating this quarter is the trading revenue. The gamblers hopped into the market. Trading revenue came big. The Fed spending on treasuries came big. You saw that from Goldman Sachs yesterday. You saw that in Morgan Stanley today. And that's what saved Bank of America's ass in terms of revenue, but still their profits down 50%. Furthermore, they're adding $4 billion into reserves, expecting more delinquencies and bankruptcies where all these businesses and real estate companies that loaned money, that got loans from Bank of America, will default on these loans. So Bank of America is putting aside $4 billion to compensate for these losses. That is not a good picture. We saw that with Morgan Stanley. Wells Fargo, of course, didn't have anything to put in reserves to begin with, but we saw that with Citi. Now we're seeing it with Bank of America. And this is the headline. It's not pre-market, it's post-market. Netflix earnings are out. Let's take a look at how Netflix is trading right now. Here is Netflix. Earnings just came out, down 10%. The so-called pundits and analysts in television so far are so confused. They have no idea what to make for it and why the stock is dropping. This is why I told you in my ultimate guide for earnings week, the beats and misses mean absolutely nothing. At the end of the day, what the stock is pricing versus reality. That's all there is. If the stock is underpricing, it goes up. If the stock is overpricing, like in the case of Netflix, it will flush to the downside. Furthermore, I explained to you that the king of all technical indicators is the 20 weeks moving average. It never failed in the history of the stock market. Look at where Netflix is. Far away from its 20 weeks moving average. You think it's not going to go back and touch it? Think again. Every divergence from the 20 weeks moving average was corrected. And of course, here's the blissful ignorance, the Robinhood gamblers, the morons who were buying options expiring this week. They were piling up, buying call options on Netflix, thinking it will go to all-times high. Well, now they lost all their money. They're not getting any penny back. Netflix, of course, reporting about 10 million subscriber gains. That's good. Better than expected, at least according to Netflix numbers, because Netflix were expecting 7 million. But if you watch my pre-earnings video, I explained to you that the analysts, especially in Goldman Sachs, were expecting over 12 million subscribers. So this number is short compared to analysts' expectations. Perhaps the big number is the earnings per share miss. That was a big miss. I mean, you didn't have any content to spend on. You didn't have any spending. So how did they miss on earnings? That is the mystery. I didn't have the time to look at the earnings report. I will dig through it today. And if there are any interesting updates, I will show you that tomorrow. If you've been following me, you know that I have a bearish trade on Netflix. I bought the 530 put and I sold the 520 for a credit debt spread hybrid, meaning that I will make a minimum of $700 either way, but with this trade my earnings are capped to $1,700 per contract. If you want to see more details about this trade, I posted some of it in Twitter and some of it I posted during my earnings preview video. Of course, had I known that the stock will drop all the way to $470 after earnings, I would have kept the naked put. But again, you can't be greedy. I mean, I would have made $6,000 minimum per contract. It's okay. No need to be a pig here. Look at the other morons who bought calls expiring on Friday and now they're getting smoked. Now, let's segue to the technical analysis for the action during the day. Here is a chart of the XLU, the utilities sector, 15 minutes, and I'm trying to show you here the yield hunting theme. The utilities catch a bid throughout the day, big pop, and it continues all the way toward the end. This was another yield hunting day. And here is the yo-yo game that I wanted to show you. This is Delta Airlines, representative of the weaker garbage airline stocks. Catches a bid in the morning, and then they give up and sell it off. Contrast that with the Qs, selling off the Qs in the morning, and then rotating back to the Qs in the middle of the day throughout the end. Back and forth, they're confused, they have no clue what they're doing. Here is a 15 minutes chart of the SPY, the S&P 500. Very similar look, gap down, and we just consolidated throughout the day, sold off a little bit, and then they bought it in the end of the day, and we pretty much closed in the flat range that we've been trading throughout the day. The point that I want to bring to your attention is the technical analyst, quote unquote, that you guys are listening to on YouTube. I am a believer in technical analysis, of course. There are certain aspects that I don't believe in technical analysis, but I'm a believer in the wholesome approach. You look at the technicals, you look at the headlines, you look at the volume, you look at which stocks caught a bid versus the others. You look at money inflow versus outflow. You look at option volumes. You look at market psychology. you look at indicators, you combine all of that and you make a conclusion. But these guys that you're listening to, the technical analysts, the voodoo scientists, what they do is they put a bunch of lines on the chart. Here's a level, here's another one, here's another one, here's another number, and one of these are going to work, whether it goes up and down. One of these will work. And if you want to find out more, please subscribe to my course, which will cost you $400. This is voodoo science. It's garbage. It doesn't help you at all. What did they say here? They said this is a bear flag formation. And what that turned out to be is a bear trap. Because look at what happened. It didn't go down as they told you. It went up. And now they're saying, oh, wait a minute. It's actually, if you think about it, it is actually a bull flag. It goes all the way up and consolidates, and then it goes up again. And if this doesn't work, and it actually reverses and go down, they will say, oh, this was a head and shoulder pattern. Here's a shoulder, here's a head, here's another shoulder. And this is all garbage. You need to look at all the input, all the data intelligently and make a conclusion. All what we did here is we reached this resistance level. This is a very important level. We reversed from it. And all they're doing right now, from a daily chart perspective, look at where we reached. This is the resistance. Pulled down once. We failed to break through it. Tried again. Failed. This is the third attempt. All they're doing, there are sellers who took their profits right here, like myself. Others are greedy. They're waiting and waiting and waiting. And all they're doing is trying to invite the weaker hands into the market, telling them that the water is warm. There are a lot of profits to be made. Hop in. Come on, hop in. What are you waiting for? Hop in. There are a lot of profits. What they want is for these people to hop in, push it all the way up, and then they take their profits, creating the pump and dump, crashing the market on top of the heads of the weaker hands. And you know what? Their strategy is successful on some. Look at here. All these dips got bought. Some of the weaker hands are falling into the trap. But the majority of the people waiting in the sidelines are smart. They're looking at this formation and they're saying this table is not hot. I'm not sitting here. I'm waiting. They're waiting. The holders who are supposed to sell are waiting. Waiting for what? What is the next catalyst to move the market? We know the vaccine headlines pump and dump last for one day. The Fed liquidity is already priced in there. Government stimulus might make it, might not, because it's already priced in there, in my opinion. The reality is they're waiting for Judgment Day. They're waiting for the end of the earnings season to make a judgment. Are the earnings and the guidance a reason to push this market higher? And what will happen is the people on the sidelines will hop in, and money, cash waiting in the sidelines will hop in and push the market higher. On the other hand, if earnings disappoint, and we've seen a lot of disappointment this week, then the sellers will be incentivized to take their profits, creating a red tsunami to the downside, because they've been piling up in the trade throughout this recovery leg. And whatever the spark is, Apple crashes, whatever it is, they will panic, hit the sell button together, and they will create this big, massive move to the downside. This is why I'm saying nobody lost anything by taking profits. Why are you so stubborn in refusing to book your profits at this point? Let's take a look at one of our favorite indicators, the VIX. The VIX was flat. It didn't do anything. It closed about 1% on the green, but nothing notable for us to see here in the VIX. It's the same story from yesterday, consolidating and waiting for the next move. The real story is in the dollar index. We talked about the dollar index yesterday, the double bottom, and it shot upward today in the green. The dollar made a move to the upside from the double bottom. Perhaps the demand on dollars is increasing. The shift from equities to cash is starting. You have to keep your eyes on these indicators. Alright, so let's conclude this video. Here is a chart, a daily chart of the ES mini futures that tracks the S&P 500. We are well above the consolidation box right now, but with Netflix being so weak right now, you will see the stay-at-home trade being very weak tomorrow, which shows an exhaustion in the market. A lot of names in the tech sector and the stay-at-home stocks pushed way above their heads, way higher than they're supposed to be trading. You're going to see traders exiting those trades. Okay? Where will they put their cash? Travel names? The garbage stocks? That pop for one day and then sell off because the picture in their earnings is very grim? Absolutely not. Where are they going to deploy their cash? That is the $1 million question. But you can see that the power is shifting into the hands of sellers. The bears are starting to take control of the market. Here is a weekly chart of the mini futures. The weekly close, very critical. If we flush down tomorrow, close in the red, this is going to be very bearish. So you have to keep an eye on the weekly closing. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.